Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about LegalZoom.com Inc. Annual Report. LegalZoom.com Inc. offers a wide range of businesses and services to support the legal, compliance, and business management needs of small businesses and consumers in the United States. The company's platform provides various business formation products, including LLCs, corporations, nonprofit formations, doing business as names, corporate changes, and business licenses. It also offers intellectual property products such as trademark and patent applications and copyright registrations. In addition to these services, LegalZoom.com Inc. provides consumer services like estate planning, which includes last will and testament, living will, living trust, power of attorney, and legal forms. The company's subscription services include registered agent, compliance, small business attorney, advice through its legal plans, and various concierge services. Furthermore, the company offers a range of other services such as virtual mail and check deposit services, bookkeeping, e-signature, trademark monitoring, and business licenses. These services are designed to support the ongoing needs of businesses and consumers, making it a one-stop shop for all their legal and compliance requirements. Unfortunately, I am unable to provide an overview essay as no text was provided. However, I can suggest some possible reasons that may have caused LegalZoom.com Inc.'s stock price to drop in the past year. The decline in stock price of LegalZoom.com Inc. can be attributed to several factors. One major reason is the increasing competition in the online legal services market. With more companies entering the space, LegalZoom has faced stiff competition, leading to a decrease in its market share and revenue. Another possible reason for the decline in stock price is the company's failure to innovate and adapt to changing market trends. As technology continues to advance, customers are looking for more streamlined and user-friendly services. If LegalZoom fails to keep up with these demands, it may struggle to retain its customer base and maintain its market position. Additionally, changes in regulatory policies or laws governing online legal services could also have a negative impact on the company's stock price. Any new regulations that increase costs or restrict operations could lead to a decline in revenue and profitability. Lastly, economic downturns or recessions can also affect the demand for online legal services, leading to a decrease in sales and revenue for companies like LegalZoom.com Inc. LegalZoom.com Inc. market capitalization of $1 billion is significantly larger than the average industry peer of roughly $0 billion. This shows that LegalZoom.com Inc. holds a significant advantage in their industry. LegalZoom.com Inc. trades at a higher price-to-earnings ratio of 54 times and a higher price-to-book ratio of 6.68 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The leverage on the balance sheet appears elevated, with liabilities of 75% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes such as buybacks or dividends rather than operational deterioration. The company has consistently reduced its share count while revenue has grown, but declining assets and equity suggest buybacks may be taking precedence over reinvestment. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline can be categorized into several key areas. At a fundamental level, changes in cost of revenue, sales and marketing expenses, and revenue recognition policies can significantly impact revenue growth or decline. Industry-specific drivers, such as filing fees, revenue earned from leads, and shipping and handling fees, also play a crucial role in determining revenue trends. Economic factors like foreign currency exchange risk, interest rate fluctuations, and inflation risk can further influence revenue growth or decline. In addition to these external factors, internal drivers such as customer relationships, developed technology, and trade names can also impact revenue growth or decline. The value of these assets and their estimated remaining useful life can affect revenue recognition and ultimately drive revenue trends. Overall, a combination of internal and external factors contributes to revenue growth or decline, making it essential for businesses to monitor and adapt to changes in these drivers to maintain a competitive edge. The changes in net income and profit margins over the past 2 years have been significant. Initially, net income decreased by 10% from 2023 to 2024, followed by a further decline of 48.6% from 2024 to 2025. However, it's worth noting that net income increased by $1.47 million from 2023 to 2025, indicating some growth in this area. Profit margins also underwent changes during this period. The gross margin expanded due to automation improvements and digitization efforts, but the operating profit margin decreased from 5.2% in 2024 to 3.3% in 2025. Despite this decline, profit margins remained relatively stable at 14.2% in 2025. The reasons behind these changes are largely attributed to increased operating expenses, particularly stock-based compensation expense, which contributed to the net income decrease. Additionally, accumulated other comprehensive income played a role in fluctuations in net income between 2024 and 2025. These factors highlight the complexities of financial performance and the need for ongoing monitoring and analysis. The company is indeed generating positive operating cash flow. This can be seen from the increase of $61 million in cash provided by operating activities between 2024 and 2025. Furthermore, a review of the company's operating cash flow for all 3 years shows consistent positive results. In 2023, the company generated $124,308 in operating cash flow, which increased to $135,639 in 2024. The most recent year, 2025, saw an even higher figure of $178,197. These numbers demonstrate a clear trend of improving operating cash flow over time, indicating that the company is managing its finances effectively and generating sufficient cash from its operations. The company's debt level has undergone significant changes over the past year. Initially, there was a notable increase in total debt from $280.6 million to $339.6 million, representing a 21% growth. However, this trend was later reversed with a decrease in long-term debt from $150 million to $100 million. In terms of interest expenses, the data presents a mixed picture. On one hand, there are instances where interest expenses have decreased, such as from $446,000 in 2024 to $1,294,000 in 2025, resulting in an increase of 189%. Conversely, other reports indicate that interest expenses increased by $848,000, 190%, in 2025 compared to 2024. Furthermore, there is also a report showing a decrease in interest expense from 2023 to 2025. The management is optimistic about the company's outlook, citing significant revenue growth from subscription services as a key driver. This growth is expected to come from lead generation activities with third-party providers. To further expand their offerings, the company has made strategic acquisitions, including the recent purchase of Formation Nation. In addition to driving revenue growth, the management is also focused on investing in growth through acquisitions and investments in other companies. This approach is aimed at strengthening the company's position in the market and increasing its competitiveness. Furthermore, the company is committed to managing its balance sheet effectively, with a focus on reducing interest rates by achieving certain leverage ratios. The management has also outlined plans for generating sufficient cash from operating activities to meet material cash requirements over the next 12 months. This includes a stock repurchase program authorizing the purchase of up to $150 million of common stock. Overall, the company's strategy appears to be centered on driving revenue growth through subscription services and customized legal document services, while also investing in growth and strengthening its balance sheet. The company has made several strategic moves through acquisitions and divestitures to expand its operations and optimize its resources. In terms of acquisitions, the company has purchased Formation Nation in February 2025, which is a significant move that will likely enhance its capabilities. Additionally, it has acquired LegalVision Thai Limited, an online legal services provider, for $1 million AUD. Furthermore, LawPath Thai Limited, another online legal platform, has also been acquired by the company, although the exact amount of the acquisition is not specified. On the other hand, the company has divested some of its assets to streamline its operations and reduce costs. One notable divestiture is the sale of an available-for-sale debt security in LegalVision for $1.6 million. The company has also sold its operational headquarters in Austin, Texas, which was completed in March 2025. These moves demonstrate the company's commitment to strategic decision-making and adaptability in a rapidly changing market. The company's dividend policy has been consistent over the last 3 years, with no cash dividends paid on common stock. In fact, there is no intention to pay dividends in the foreseeable future. However, it has made special dividend payments in the past, which were not related to common stock. On the other hand, the company has actively engaged in share buybacks through various programs. A significant stock repurchase program was approved by the board of directors in 2023 and increased in 2025 with a total authorization of $415 million. Additional funds were allocated for share buybacks in 2026, bringing the total to $515 million. The company has also repurchased shares through other means, including reducing the exercise price of stock options due to special dividends. In 2023 and 2024, the company repurchased a substantial number of shares worth millions of dollars. That concludes the financial summary for LegalZoom.com Inc. Feel free to comment below, and I will be happy to answer them when possible.